Welcome back to another episode of Profitless on Purpose, the nonprofit accounting podcast. I'm one of your hosts, AJ Wheeler. With me, as always, is Mark Palardy.
Hey, everyone.
Got a great show this week. A couple articles. We have Forbes ranking the wealthiest American charitable giving. Who's giving? How much are they giving? We talk about America's ultra wealthy and their philanthropic giving and what the numbers say. Then we have federal grants. You want to apply for a federal grant? There's a checklist to help you win more funds. We'll go through it. Do they miss anything? Is it complete? Spoiler alert, it's a pretty good checklist, but we'll talk about it. And then time to reform donor-advised funds. Boy, this is an interesting one. We get into a deep discussion about what donor-advised funds are, what the rub is on them, kind of some of the interesting, enlightening things that we learned from this article, but quite a twist and how they differ from foundations, private foundations. But we'll talk about it. Really good discussion on this and really eye-opening in this episode, I think. And then our question of the week is a grant audit or a grant review or an internal review of your grants. What you should include, how you should include it, what are some best practices, what we think would be good additions to you reviewing your grants and documenting those grants and contracts that you have with your nonprofit. We talk about all that this week, but Mark, you have our first article. Take it away.
Hey, thanks, AJ. Yeah, our first article is from Philanthropy Daily from Austin Detweiler, and it's called Forbes Ranks the Wealthiest Americans Charitable Giving. And so this article isn't from Forbes. It's actually sort of an analysis of the Forbes list that came out. And surprise, surprise, it's not too flattering for American philanthropists. Of fully 144 of the top 400, so this is the top 400 wealthiest Americans, fully 144 of those 400 have given away less than 1% of their net worth to charities. And then less than 7% of the 400 wealthiest Americans have given at least 10% of their net worth away. So they're keeping a lot of their net worth. So this author kind of goes into that, but also wants to bring to the attention that the way Forbes categorizes wealthiest Americans, they're not just looking at their net cash, they're looking at their assets and valuations of companies, et cetera. So stake in public and private companies. So some of these people, as you hear about, they're super wealthy, but haven't given away that much. That's because a lot of their assets are tied up in businesses that they're still running, they still might be involved with. So it might be something to keep an eye on them in the future to see if they actually do start giving. They still have massive amounts of money, but they just don't have a significant interest at this time in charitable giving, kind of showing that wealth does not a philanthropist make. But I did actually look at the original Forbes article, which I thought was interesting to just name drop a little bit. And keeping in mind that things are tied up in companies and assets, here's some popular, familiar names that you might know. Some people who have given less than 1% of their wealth. Elon Musk, Google co-founder Larry Page, and 142 others. Some who have given between 1% and 5% of their wealth. Sergey Brin, Jeff Bezos, calling you out, Bezos. And then we can jump kind of up to some who have given more than 20% of their net worth. Surprise, surprise, Bill and Melinda Gates. Mackenzie Scott, which is Bezos's former wife, Warren Buffett, George Soros, among others. So there are still people out there, billionaires with an appetite to be giving away their wealth to charitable organizations, but definitely this skews in the favor of the wealthy keeping their assets and keeping their wealth close to the vest. AJ, thoughts?
Well, I think the important part of the article that I was looking at is like, you can't just look at somebody's net worth and kind of determine, man, they should be giving more to charity. Often that net worth, like Mark mentioned, is tied up in like fixed assets, holdings, and businesses. It's not like all these billionaires have a bank account that has, 8 zeros after a number, just sitting there in cold liquid cash that they can just spread around. So I think, that's one, not that I'm like super super cozy with billionaires or anything, but also too realize that the philanthropic giving that they're doing is a tax strategy, and so the tax code is going to dictate how much is reasonable for them to donate, and it's limited to a percentage of their overall income. So I think depending on a lot of different situations kind of determines how these people are going to spend their money. There can be ones that altruistically do that. Usually, though, they're pushing an agenda or a pet cause that they are behind. So, I think healthy giving from the richest Americans, is like a tax incentivized trickle down kind of methodology that's been put forth in the tax code and in of course the other bells and whistles that come with donating that type of money. But I would look towards if we want to see more of these ultra rich donations, making it more attractive to donate through our tax code. I think is really, from an accountant's perspective, or looking at it from a nut and bolts, taking out any emotion involved with it, would be, if you want more ultra wealthy individuals to donate, make it more attractive to them, make it more profitable for them to be able to donate that type of money. And essentially what you're doing, what the tax code is doing, is it's cutting out the government side of giving grants and entitlements and using that tax money. They're cutting that out. They're cutting essentially the middleman out, the federal government, and they're making it, tax worthy to donate directly to causes that you see fit. So I think the other part of this is, usually these ultra wealthy or these high net worth individuals are usually ahead of the curve. And this might be another sign that we're entering into a recessionary period where they're kind of hunkering down and keeping their money, close to the vest and not giving it away to charitable causes as they would have been in the past couple years when, even with the pandemic, you're talking about things like Amazon seeing major boosts in revenue and net profit. So I think if we're concerned about this and you want to see a shift, I think that shift needs to be incentivized for these individuals through either the tax code or through, like promises of later, benefits to them. So, of course, they can be altruistic about it and donate out of the goodness of their heart. But if we want to see a widespread shift in this, I think doing it through the tax code would be one way to do it.
Yeah. I'm going to disagree with the last couple points, AJ, because that's what I do sometimes. Is first off, this is like giving all together of their net worth over years and years and decades. So I'm not sure that saying, well, of course they're holding on to it right now because of potential recessionary. That doesn't, this is the long tail, right? Even Elon Musk has been around for a while and has amassed quite a sum of a fortune. And I guess maybe I fall a little bit more on the altruistic side of the fence, where maybe they shouldn't be giving just for tax benefits. Maybe they should be giving because society has been good to them and they've created and amassed a ridiculous amount of wealth by the time you're a billionaire. Like, let's give some back. Even, a billionaire even giving away 20% of their wealth, which is the high end of this bracket, still leaves you with 800 million, right? So it's not like any of these people are suffering. It's just that it feels like charitable giving isn't as important, isn't a big priority to them. And yes, some of the stuff is tied up in assets, some of it's tied up in companies. And we know certainly Elon Musk is one who's probably tied up all over the place since he has multiple companies and is doing multiple things. But, he's certainly at least got 4 billion sitting around to buy Twitter, so there's, or even more, I don't know. Don't quote me on that. Anyway, I just think there's a level of giving that should be happening. And I'd be curious to see what they're giving compared to the average American. Does this fall in line if you were to take, a swath of 400 average Americans, like how much percentage of their giving is actually happening? And, Bill and Melinda Gates is probably an example on the other side, because Bill they both kind of retired, right? So he had the money in cash. He has Microsoft stock. He has the capacity to give in that way. And although he's tied up in companies, he realizes, he doesn't really need to grow and build this legacy company anymore. So I would just hope that if and when I become a billionaire, I'm going to appreciate what society has done for me. And I'm going to want to give back because of all that society and the world has given me. But who knows?
I have a question, Mark. Using Elon as a kind of an example here, I think could you, I guess, make a case that Tesla, in a sense, and even Solar World, or what got rolled into the solarization of private homes, making solar panels and electricity less expensive for the average household, or at least market offering in that way. Do you think that, instead of philanthropically giving, he's reinvesting his money to do good in that way, in a capitalistic venture?
I think if it was a charitable organization, one of those 503Bs or whatever, that I would be more inclined to make that argument. I think, arguably, yes, these ventures are helping the planet, and I do see benefit in that. And maybe that is the thinking on their side. I'm willing to give the benefit of the doubt. The other one that I called out that's less than 1% of their wealth is co-founder Larry Page of Google, right? It's like, yeah, I don't know that we could have any altruistic designs on what Larry Page did, which is basically, marketing 101. He reinvented it. So I think you are correct in that he could be seeing the world, and time will tell, right? Over time, if he starts giving away his wealth in later years, he's still in prime working years, whereas, Bill Gates is not. So, these things could change, and there's the billionaire donor pledge to give away half of your wealth. And I know Warren Buffett's big in that, and Oprah and some other people who've got big money, even persona non grata J.K. Rowling is part of that club now, where she's worth less than $1 billion because she's given away more than half of her wealth. So, I think the difference for me, maybe, this is getting to a longer conversation than I intended on this, but I think the difference for me is giving your money away to an organization who can then do with it what they will is part of the charity part, right? Where it's like, I believe in this cause and I'm going to give it away and let other people work with and have this money. Whereas if I'm building a company for solar power or for electric cars, I'm still invested in that stake and I'm still driving what's happening there. And it doesn't feel as charitable to me.
I will mention the Google's still free. I mean, that's pretty altruistic, right? I'm only joking.
Yeah, right. You know what they say about when something's free, the product is you.
It's you. Oh, man.
Oh, Soylent Green is people. Okay, AJ, I think we've gotten way off track. You've got our next article.
All right, this one's from Nonprofit Hub. Federal grant checklist to help you win funds. So they're talking, this article is written from looking for federal grants. So they have a checklist that should help you, your organization, come across federal grants and funding through, through federal entities or through subrecipients via state grants. And so they put together this checklist. We'll go through it, and what they're surmising is that if you use this checklist, you'll get more federal funds. So I'll go through the checklist. We'll kind of talk about it a little bit, and then I'm sure Mark has a little bit to say on this. I do as well. But let's go through the checklist first here. So this is their recommendations for preparing to compete for a federal grant. So first they say registration. Ensure that your nonprofit is registered in the federal grant system. You receive a DUNS number, which is it's called a I always forget what this is, but Data Universal Number System. So essentially, it's like the federal government grant EIN for nonprofits. And this is the DUNS number is used in conjunction with your EIN. And so they talk about handling this early. It's complicated, it involves a waiting period, and you got to renew your registration yearly. And so it's a formality, I think, but make sure you have your DUNS numbers, time and capacity. So they're talking about turnaround on federal grants being pretty quick from the initial release. Now, whether or not that's true, in my experience, you probably have a little bit more runway with state grants and with requests for proposals coming out of a federal agency, especially if you've worked with them before. But this is talking about new grantees. So usually there's a tight window that means you'll need the capacity for your team to be able to handle all the requirements on that. And so just be prepared. And I think this goes without saying, any grant writing undertaking or trying to win a grant is going to take some time. So they talk about having a standard application materials. They're talking about having your reviewed and or audited financial statements ready to go. Organization and program budgets, bios and resumes for leaders and key program staff. I would say to smaller organizations, especially ones that are applying for their first federal grant, you may not have reviewed or audited financial statements. If you don't, you need to have a clean set of books and have at least a set of financials that you would present to like the board or a funding agency that you normally would when you're applying for these. So I don't necessarily, this article makes it seems like you have to have a reviewed and audited financial statement. Check your state requirements, but most of the time, we recommend an audit doesn't do much for you. You're essentially paying for compliance, and it can be expensive. But sorry, I'm getting off track here and editorializing already. But they also ask for you to have data to illustrate your impact. So this is something that we've sounded the alarm about before on this podcast. But making sure that you're not just qualitative but quantitatively impact, collecting data on how many people you're serving, how you're serving them, where you're serving them, the type of people you're serving. If you have that information available and you're able to show a track record of being able to analytically present who you're targeting and who you're helping, it goes a long way. Grant applications love data like this. And so thinking about having that ready to go when you're applying for a grant puts you far ahead of the curve, as opposed to just a nice narrative around it. They also talk about partners and supporters. So I don't know that I've heard of this, but I've only been on the financial side of usually applying for grants like this or reviewing financial information on this. But they're saying that federal grant applications often require a letter of support. It often referred to as an MOU, or a memorandum of understanding. And essentially it shows you have a network of supporters who vouch for your work. And, essentially it's the grant application analogy to a resume of references available upon references available upon request. So making sure that you have, other organizations you've worked with or been supported by, and then community members that you supported, having those available is great. So then the last one is, and this is in the aspect of getting the grant, you need grant management capabilities. So you need a team to handle program execution, financial management, compliance, staff who can make grant related work a top priority for the duration of the program. Surprise, surprise, if you get one of these grants, you need people to work it. So having a plan in place on how you're going to hire or how you're going to allocate staff time, all of that, infrastructure and staff to manage data collection, analysis, and reporting. We can get into this a little bit more when we talk about it. And in fact, we have a question at the end of the show here that goes directly into grant management and looking through your grants and making sure they're organized correctly. So stay tuned. That's a tease, as we call in the business. But then also make sure that you have the team capacity, and the big one, and this is one that we've talked about before, actively manage your relationship with your federal grant management officer and our program officer. So I thought, essentially what they're getting at here is a grant writing, whether it's federal or non-federal, can be quite an undertaking. And you want to make this as easy as possible, or at least as straightforward as possible, because often this can seem very daunting when you're looking at these. So what they're saying is your best competitive advantage will be an active grant program that you have, backed up with documented best practices. So, Mark, love to get your insight in whether or not you took anything away from this that you found helpful. Or
Yeah, I think it's actually a pretty nice, concise article from Nonprofit Hub. They like to do these listicles sometimes, and they are helpful in guiding you. And I think we'll link to the article in on the YouTube, but we want to just make sure when you're doing federal grant writing. I mean, I guess my biggest recommendation is try to get with somebody who's done this before, right? Whether you're hiring an outside company for your first time or you're hiring within your company, if you think you're going to be doing a lot of these, knowing there are people around that can, it's the federal government, right? It's like doing a tax return or any other form you do for the federal government. They want their I's dotted and their T's crossed, and you got to kind of conform and comply with the way they want data presented. That might mean you're going to need to create a chart of accounts of some sort, maybe outside of your normal reporting chart of accounts, that puts things in specific categories that the government likes to group things together as. So there's lots of different pieces, but really, if you use somebody who's got some expertise in this area, it's going to help you, at least the first time, go through and grease the wheels so that you're not getting stuck and A, just not getting a grant, or B, having to make a whole bunch of revisions because you didn't understand what the requirements were. I think, again, following this checklist is great, but having the staff to not only get the grant, but then to help manage the grant, at least for your first run. Once, it is also the federal government. Things don't move very quickly and they don't change that often. So once you kind of get this under your belt and you see the repeated structure of it, it's much easier in the future. So I guess that would be my advice on that.
no, I think a good point. And I think one thing that the article doesn't mention that I really want to stress here is this grant application writing process. It involves a team. And I think that this checklist kind of highlights it, but it dances around the fact, but it doesn't really get to the point that you need a program staff involved and a financial staff, and then some kind of oversight and kind of somebody that pulls it all together. And I think we've talked about this on the program before, but especially when you're applying for these federal grants or a state grant that follows the same kind of application process, you're not just going to be able to rough in a budget, send it in and say, this is what we want to do. There's the best grant applications that I've seen. The narrative lists the cost that's associated with just the straight budget and gives more kind of minute detail of what's going on with those, numbers on a line for what are supplies, how many staff are you going to be employed, what's the type of reach you're going to, have, what are your data collection systems, why do you have dues and subscriptions of 10,000? Oh, you have a database that supports and brings in that data and curates it for you. So I think having that, not canned but good responses to your narrative type of portion of the submission that ties into your financial portion, you're leaps and bounds ahead of most who are just kind of writing a narrative out and then linking it with some kind of budget that accounting put together. Having everybody involved to understand, and gonna help you on the back end of being able to spend the amount of money that you've been granted, and have everybody involved working together on this to make sure that the number of people to serve that grant is available. You've correctly put together a budget that represents what's needed in that, and then be able to tie that back to some kind of narrative that will win you that award, I think is vital. And it's one thing that they don't mention in the article, I think.
And this is a federal grant, right? So you're going up against a lot of people nationwide trying to go for these grants. So if you can make yourself stand out and tell your story with both the narrative and numbers, I think you're steps ahead of some others who are just trying to do the mechanical process of getting this submitted, right? We've mentioned time and time again, especially applying to any grants this applies. Make sure the passion for your mission and what you're trying to do come through.
And you're applying for a grant that matches what your nonprofit is doing. I mean, I've seen so many times people are just they're so anxious or so, thirsty to get a grant that they go after, anything out there that, even closely resembles the type of work that they do. And what you're really doing is you're throwing a bunch of work at something that could or could not be a good fit for you and the person that's granting the money. Not just your nonprofit and the people you serve, but the people that are granting the money. And if there's a mismatch there of who you're serving, how you're serving, or what you're serving, with what the grantor is hoping to accomplish, you're going to spend a lot of time for something that is, at best a coin flip. If not, you've been wasting time on something that, you've been running down a track that's leading the wrong way. So I think, making sure that the grant opportunities, you have a finite amount of time to put these together and which ones you're going to choose to do. Don't strike off on one that is not aligned with what your organization does, and now's not the time to try something new if you're trying to secure a grant.
Yeah, and I would also add to that, if you're inclined to hire somebody out of house to help apply for those grants, make sure you're connected. That person is connected with somebody in your organization, so that somebody in your organization is reviewing and making sure the narrative really matches and really is punched up to the level of passion that you're going to have within your organization versus somebody who you're just paying a fee to help acquire a grant for you.
Yeah. The other piece of information or the other piece of advice that I would give in closing here is that, like, if you're applying for a grant that you currently don't have capacity for, make sure that you have a plan in place on how you're going to hire those people. And even if it's a cost reimbursement grant, work into your grant. It costs money to hire people and get them trained to be able to do a program like this. Pad your budget or get in your budget some kind of advanced funds to be able to bridge that cash gap in hiring that you might need, especially if it's a larger program that you're going after, that you're going to have to hire 5-10 people. That can be quite a cash suck, especially on a reimbursement basis where you're putting out a bunch of money first. The nonprofit is spending a bunch of money first before you can even apply or invoice for that money back. So yeah. We could go probably all day on this one. Like we dedicated a whole show a little while ago about grant management. So I'd encourage our listeners, if you haven't heard that one, to look at it. Maybe Ethan, the producer, could put a little bubble pop at the top here to take you to that episode. But I think it was a good one. So, but Mark, you got our next article for us.
Yeah, this one's a juicy one, again from Philanthropy Daily, called "Time to Reform Donor Advised Funds" from Craig Kennedy. This is, I think, a very well-written article that kind of goes into the depths of donor advised funds. And I'm going to do a little recap, which the article does as well, for those of you who might not be familiar with what donor advised funds are. But basically, donor advised funds are a way of creating a system where it allows donors to reap the tax benefits, but puts the money in a fund, a DAF, for later philanthropic giving. And basically, this article says that every $8 of American nonprofits go to donor advised funds. They're kind of efficient. They're a tax advantaged alternative to creating a private foundation. And the article goes into reasons why a donor advised fund is more preferable to actually creating a foundation, especially if you're wealthy. There are some advantages to that. One thing I didn't know, which the article goes into, is that these DAFs have been around a long time, 1930. We're talking almost 100 years now, but they really have come into vogue recently, and especially with some tax reform that was done in the 1970s or 1969 that really kind of goosed up their advantages, tax and otherwise. So basically, an individual or family can donate to cash in a DAF and receive a charitable deduction. So they can give either appreciated stock or property, and then they receive the charitable deduction, and then they can decide, and they can avoid capital gains tax on appreciated stock, for example, and then they can decide later where they want to give those funds. This started out by like small specific donor advised funds, but then it's grown and grown and grown, and we have sides on both the right and left side of the political spectrum that have specific donor advised funds. And you have even many larger investment companies like Schwab, Bank of America, dozens of others that have their own donor advised funds that you can put your money away in. So some concerns in these donor advised funds, which the author brings to light. But foundations, which is kind of the other way of giving money of this variety, they have a public reporting requirement where donor advised funds don't. So, and as such, people who want to avoid reporting requirements can see having giving money to a DAF as preferable to foundations where they might have to fill out some tax forms, et cetera. Also, foundations are required to distribute 5% of their assets every year, and donor advised funds don't have any such requirements. So a wealthy person could donate millions in appreciated stock, and the funds never have to be given away during their lifetime. They could just sit there in a donor advised fund forever. Essentially, they can even pass these donor advised funds off to their inheritors, and those inheritors can then decide at which point they want to give away the money. But the tax advantages are still happening on the day or the year that the person is putting the money into the donor advised fund. So essentially, it's socking money away, giving people a tax advantage for that, and it's not making its way to the nonprofits. Whereas with a foundation, the foundation has to at least give away 5% of their assets every year, meaning that it is getting to the nonprofits themselves. So the DAF, according to this article, is allowing wealthy people to kind of warehouse their money, and over time, this wealth just accumulates in these funds, and the managers who are managing these funds, the Schwabs, the Bank of Americas, or the private individuals managing these donor advised funds, have no real incentive to kind of push the donors to say, let's give some of this money away. Why? Because they earn fees on how much is in the fund. So for them, it's better if people aren't giving the money away. They're making more money. So, and these people are not usually of a charity-minded place, right? This isn't a nonprofit. When you think of Schwab, you're not thinking of a nonprofit. You're thinking of an investment broker, right? So they don't have the assets. They want assets in their funds so that they can be making money. Another criticism related to donor advised funds is transparency, right? When you're giving to a DAF, you don't have to say what it's going for. You might have to disclose that you're giving to a DAF, but once they give the money out, there are no reporting requirements as to what that money went for. So that's a big plus for a lot of people. But for some, they want to see that the charitable organization you're giving to, what that is. And if it's a foundation, the foundation has disclosure rules and regulations as to having to disclose what is going out. And there's no way to see how the money is used. And it's often that's seen as a plus, and it's encouraged to get people to give through DAFs. And one of the things that actually has started to happen is that foundations who don't want to disclose where their money is going can now give money to DAFs, and then the DAFs can give out the money, and then they don't have to disclose. All they have to disclose is that they gave to a donor advised fund. So that foundations themselves are using and creating loopholes using donor advised funds to get around some of the transparency and reporting requirements. Also, because they don't have the distribution requirements, they don't have to meet these 5% thresholds that the foundations do, which I mentioned. And the last piece, which is I think one of the trickiest pieces, right, is that DAFs can support not just 501c3s, but they can also support 501c4 social welfare organizations. So social welfare organizations are often lobbying organizations on both the political spectrum, right? And there are two big ones that they mention in the article. One is ultra conservative and one is ultra liberal. And so essentially, you can be donating money where you get a tax break in order to help fund lobbying efforts and to fund a specific agenda that you're interested in. And whether these lobbying interests are for public welfare or not is debatable, but it is costing the Americans, tax money, because that money is coming off of, you're getting a tax benefit for that. So with these problems in mind, there are some fixes, because people are starting on all sides of the spectrum. People are starting to realize that there are some inherent problems with these donor advised funds, and they've created a system, some pending litigation called the Accelerating Charitable Efforts Act, which this author thinks doesn't go far enough. But some of the things that this would do is kind of force force the money to be given out more regularly and more frequently so that they don't just sit in these gigantic pools. I don't know if they have a specific percentage requirement like a foundation would. But at the same time, it doesn't address some of these other issues that I mentioned. So the total secrecy, the other competitive advantages we talked about aren't going to be fixed with this act. And this author suggests there are ways that we could go about doing that. I don't want to get too deep in the weeds on what his suggestions are, but suffice it to say, he wants to create these donor advised funds to act more like foundations and to maybe limit what the 501c4s are able to receive from donor advised funds. And there's another article specifically on 501c4s that we're going to talk about in a future podcast that I found very interesting. But it's just too much for one day to kind of go deep in the weeds of all of this. So anyway, I thought this was super fascinating and really gave me an education on donor advised funds and some of the ins and outs that I wasn't really aware of. And AJ, I'm curious what your thoughts were.
No, I love this article just because we've talked about donor advised funds on the show before, on the pod before. But I don't know that it's ever been really broken down in such minute detail as this and given a history. Donor advised funds, kind of their popularity or their impact has, it kind of ebbs and flows depending on what's in vogue. And so, he mentioned the 90s, but more recently with the Trump's tax changes that happened, where charitable giving and the long filing of itemized deductions really changed. It really shifted more DAFs, to the forefront, I think, in the past 5-6 years. And so these donor advised funds, I was unaware, that a lot of them can just be you donate money and then it never gets used and it just sits there, and some money manager kind of takes I'm making a very generalized kind of negative statement here about DAFs. I mean, in reading it, it seems like there are a couple, they're used for charitable giving, and they're used to kind of pool money together from, quote unquote, smaller donations to make more of an impact and grow money to be able to grant money on a continual basis as opposed to just an individual giving. So I don't want to come off as if I think donor advised funds are a horrible, evil investment scam or something, because I think they serve a purpose. But I agree with the author that I think there needs to be some more transparency, because what he's laid out here, really makes it seem like these donor advised funds could really skirt, what charitable giving means. It's almost just like an investment warehouse of tax-free money that's going in there that's considered a charitable donation. But then if it just sits in perpetuity in an investment account that's managed by a bank, that's then reaping the benefits of administrative costs and interest incurred and investment returns, is it really a charitable vehicle? Or is it more of an investment scheme, a tax avoidance investment scheme that's allowed under the tax code? I would argue that the provisions that he's setting forth for change and for legislation around donor advised funds make sense to me. I think having a requirement of distribution like a foundation is a great idea. I think being more transparent when it comes to charitable giving and where the money's, not only where the money's going, but where the money's coming from, makes a lot of sense as well, especially when we're talking about any kind of political engagement that happens. I mean, I think transparency is good in those situations, and understanding where funding coming from and how it's being funded is really good. So I found this article fascinating because I thought I knew a little bit about donor advised funds, but this article really opened it up and really gave a good distinction of the difference between, how a foundation grants and gives and manages their money, and a private foundation at that, versus these donor advised funds, and what those real differences are. Because I'm not so sure that before I read this article, I was really clear on that. In first of all, the investment difference. Second of all, how different they are in the amount of money that they're required to give out. And I think, not to get too far in the weeds on in government regulation or oversight, but it seems to me like donor advised funds right now are pretty hands off, and I get nervous. And this maybe is tipping my political cards or leanings a bit, but I get nervous when banks and financial institutions get to be really hands off with how they're managing money and how they're being forthright in what's being donated and who's given to. So there's a lot of incentive for this to remain the way it is by large investment groups and bank groups that I think doesn't benefit anybody but the investors and the stock stakeholders in those private institutions. So I think having some kind of transparency or making a move to where more of this is required, where it hits the American people and the nonprofits that need this stuff, I think is great. I'm all for that, I think.
Yeah, and I want to just stress here that I don't think donor advised funds in and of themselves are bad, right? They're very good vehicles for individuals to use, and especially AJ brought up the great point of when the standard deduction raised, right? If you're using your donor advised funds in a proper way, you can be donating more in one year and then taking the standard deduction in the off year, so that you can actually itemize in one year, and you can figure it out with your tax person or yourself, how you want to manage that strategy. But I would say, buyer beware, if this is an issue that is important to you and you are giving to a donor advised fund, ask them, how much of these funds are you actually giving out? How much are you sitting on with your donor advised funds? Is there a specific percentage that you aim to give out per year? Because these are important questions and probably are part of a DAF's portfolio. And if you're more interested in giving to a lobbying effort, well, just realize you're not really giving much charitably. You're really just making a political donation and getting a tax deduction for it. But if you're really interested in doing this to help philanthropically, but yet to also help yourself on a tax basis, which is, why not? Win-win, right? Then ask, then be curious as to how a donor advised fund actually manages your money and how much they're giving out and how much they're helping the community. So with that, AJ, I think you got our topic of the week.
Yeah, so this is a question that came in. Somebody was recently tasked with performing an audit. Now, I want to make clear that the question and that an audit here is they're essentially reviewing internally their grants and trying to get together information so that they have it all listed. So they wanted advice on what they should be looking for, how they should be organizing their grants, and what information they should be kind of putting together as like organizing their grants and having all the backup information here. So things that they said that they would be looking at would be like project timelines, deliverables, milestones, program income and budgets, sub-recipient activities, status of funds spent, and financial expenditures and budget narratives they wanted to kind of bring together. But they were wondering if they had any blind spots or what best practices are for organizing and keeping together grants and understanding what the spending has been like and what information they should have available so that they can A, better manage a grant, and B, report on a grant easier. So I thought it was an interesting question. But Mark, I'll let you jump in here first and kind of give your oversight. Probably good to mention we did a whole grant management show.
We did, yes, we did.
To listen some more, but
and I would say AJ is our resident auditor here on the podcast, so I know he's going to give a lot of audit specific things. And I think this question, they're using the audit term loosely, right? This is more of an internal review of the different grants they have. I think this is a good process for a lot of organizations to have, and probably have the accounting department do it versus the development department, right? Depending on, just have a different set of eyes in looking at these things and helping to determine, not only what some of the specific items are contained in these grants, but ask maybe some more basic questions like, does this fit in with the mission? Are there specific grants that we were successful at getting that speak to a certain aspect or a certain project that we're doing, so that we can direct a development department to look for those kind of grants, right? We can see over time that the grants where we're going for project X are really successful. So maybe start, utilizing and helping to determine bigger picture. Does this fit in with our mission, and what can we do grant wise? So don't just look at the nuts and bolts of the grants, but look at the purpose and, try to figure out within the scope of what you're doing for your organization, do some of them still make sense, right? If you can figure out with a metric, not only how much the specific grants cost, but maybe how much time is spent in acquiring those grants, in managing those grants. I know that'll be in some of your financial expenditures, but I'm not talking just what you're sending out to them. I'm talking your internal numbers, so you can see, did we need to hire a person to actually manage this grant because it's so complicated? Is that worth it for the future? Just try to come up with the bigger questions and see what's worthwhile. And I mean, I guess that's where I'd start, is at the 30,000-foot view.
No, I think that's good advice. I would say from a grant management perspective, tracking how much time, I think Mark's, like I always think of, and the best grant management people that when I was an auditor, or even the people that I work with now, they kind of have, like, for lack of a better word, a cover sheet to their grants. And so it lists all of the grants by, what it's internally called, what the funder calls it, because surprise, surprise, oftentimes the county or government or, grantor calls the grant one thing. The program staff calls it another. The accounting department has it listed in their system as something else. And you want to make sure that when you're talking about grants, the name of a grant, or somebody's asking for information related to a grant, that we're all talking about the same grant. Now, this may sound like elementary, but I've come across numerous occasions where people are asking for information on a grant in an organization that I'm working in. I have no idea what they're talking about, and I waste time going back and forth with them to try and understand which grant we're actually talking about, because it's called something different by the program staff, it's called something different in the accounting system, and it's called something different by the grantor. So having a sheet that clearly states what the name of the grant is, coming up with a cohesion of where that is. And then that same grant sheet needs to have, like, the time, of when the grant starts and when the grant ends, the location of the grant document, where you can find it digitally, or God forbid, you just have it in paper form in a filing cabinet, but where it's located, the total amount of the grant, who your grant contact is, like having this all on like a cover sheet for your grants goes a long way if anybody ever has questions. If you're being audited, your auditor will love to see this grant thing. You get a lot of bonus.
I would add to that list, and specific projects that this grant is funding, right? Because you might have a big grant that's funding more than one project.
Yes.
And if you're having to dig for that, oof.
Mark, preach. All the grant management people, just put their hands in the air, the pray emoji. But so I think, having that, who the program manager is. So if you have questions, who you're going to connect with on those budget actuals, we'll get in that in just a second. But who's running the grant, who your grant contact is. So if you have questions and that program manager is out of the office or on vacation or won the lottery, you know who to contact, how to contact them with questions, whether or not it's federal funds or not. If it is federal, listing the CFDA number, or they changed it recently, the assistance listing, it's called AL number now, what that is, where you can find it in the grant, like any kind of, the other thing that I love to see is unallowed cost. If there is something that grant, say they don't pay for your insurance or professional fees, having that listed on your grant listing tracking sheet would be excellent to see, so everybody can see it at one in very quickly. The other thing is, like what type of grant it is, identifying the accounting treatment for it. Is it a fee for service arrangement? Is it a reimbursement grant? Is it a straight grant that, is it a restricted grant for a specific purpose? Listing that on that tracking sheet goes a long way. And trust me, if you do all this, your auditor is gonna, smooch you. He or she will be over the moon if you have this type of tracking. So I think having that cover sheet of what type of grant, how, who, what, when, where, why, all of that documented on a sheet can go a long way in making it really easy to manage and understand what grants are active, when you should be looking to close out a grant. Reporting requirements, that's another one. Understanding when reports are due, what types of reports are due, and then scheduling those on your calendar to make sure that you're in compliance with that is huge. So yeah. And then, having budget to actuals on these, giving the program staff the autonomy to be able to spend their money wisely without underspending or overspending on their grant is huge. You don't know how many organizations kind of fly by the seat of their pants and at the end scramble because they've overspent or need to figure out how to spend $25,000 in the next 4 weeks. Can be really difficult. I know, it can be difficult. Like, this is not going and buying a new bathroom vanity or something. This is trying to help people within 4 weeks and spending 25 grand that you've underspent the grant, or then running back to the grantor and asking for a time or a no cost extension on when you can use those funds can be time consuming. So, I can't recommend this grant kind of cover sheet that really lists all your grants and goes into detail about who's managing it, how you're managing it, what you're managing, what programs is huge.
Yeah, I think AJ, you covered a lot there, and just like that, I think we're done with another podcast. So
if everybody's still awake and didn't fall asleep
right?
After my grant ramble.
No, grant management is important, and it's also helps you get to sleep sometimes. So dual benefits. Anyways, on behalf of AJ and myself, thank you so much for joining us for another episode of Profitless on Purpose. We certainly appreciate you being here. Feel free to join in the conversation either by commenting on the YouTube video or sending us a tweet at ProfitlessPod on Twitter. And we'll see you next time. Thanks so much.
Thanks, everybody.